Good morning, everyone, and welcome to the Ankerstar Wealth Morning Show. I'm your host, Allison Ankerstar, and today we'll be talking about the Fed meeting today, Janet Yellen's statement, and the Amazon job cuts. But before we begin, as a reminder, this is a financial education presentation, should not be construed as personal financial advice. Full disclaimer information is available at ankerstarwealth.com. Good morning, Steve. Today marks the start of the most important Fed meeting of 2023. What do you expect to happen?
Well, good morning, Allison. Good morning, everyone. I think that we are a complete coin flip between a quarter point raise or no raise at all. And here's why I think that, and then I will conclude with what I think will actually happen. But you can see the market's actually celebrating it. The market was up yesterday. The market appears to be up today. I think that will, my personal opinion is that holds. And I think the market's going to be up tomorrow too, in anticipation of either one of those two scenarios. And the market goes higher, that being either no raise or 25 basis point raise. So what the challenge that the Fed has right now is, that their mandate is to keep, full employment and inflation in check, right? Well, not specific to their mandate is, not break the banking industry around the world, let alone here in the United States. So what they did was last year, that Chairman Powell said in his Jackson Hole speech, more pain ahead. They basically raised rates at a historic pace, and they were going to raise rates till they broke something. They did. It broke. Silicon Valley Bank. Now, Silicon Valley Bank was also instrumental in breaking itself with some interesting management decisions. But all in all, we've had some fallout in the past week and a half in the banking industry, right? And some people are kind of nervous about it. So they are, where does the Fed want to be on the side of history? Do they want to be on the side of history that they ease things to make sure that the banking, financial industry was stable? Or, and so, in doing so, they kind of slow down their war on inflation a little bit, put it behind, slow down the schedule where inflation eventually will go away, but not as fast as it would have. Or they continue to raise to say that they're sticking to their guns and they're going to beat inflation no matter what. I think it is crystal clear that if they continue to raise rates and there's more problems in the banking industry, that they will get 100% of the blame for not paying attention to what's actually going on, and that they will hit the history books as being causal. I don't know if I were on the board, I would, that it's a board of, I think, 12 governors on the board. I would be a strong dissent against any raising right now because of the potential for getting it wrong. So you don't want to put more pressure on the banks, right? You've done everything you needed to do up to this point. So I say pause and then have a dovish outlook of we'll resume the rate hikes if we need to once the banking system shows some stability. Those are the words I would use. I'm not in that job, but that's what I expect to kind of hear from them. But it will not surprise me at all if they continue to raise a quarter point and say much of the same thing of, we're aware of the issues in the banking system, blah, 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 right? But still raising a quarter point. So, so I am okay with going risk back on here. Some of the folks may see some moves in their portfolios based on that today, some changes that are happening already this morning before the market actually opens. So overall, a huge Fed meeting this week. We'll see how it's all anybody's going to talk about on CNBC for the next 2 days for sure. But we'll see tomorrow at 2 p.m. Eastern time what the Fed decides to do.
Next, Treasury Secretary Janet Yellen has said that the government could back more deposits if necessary. Is this reassuring or an alarmist statement?
Yeah, so I think it's being interpreted by whatever your pre-inclination is, if that's the right word, of to where if you think that the banking system is on its knees and about ready to basically capitulate and we're going to have bank problems forever, then you're seeing as alarmist. If you think, as I do, that the banks are fine, yes, you're going to have some high risk players get weeded out. Some smaller banks are going to pay the price and have to have somebody come in and backstop them or buy them. I get that. But if you think overall, systemically, the entire financial industry is actually fine, then I just think it's a reassurance type of statement. So I 100% think that when she said it, she was meaning to reassure everyone that, like, look, things are happening. we got that. We are taking appropriate measures. Last Sunday, it's now 9 days ago, historic move on the weekend to make sure that, hey, we'll stand up an FDIC account that's going to have extra insurance in there to backstop all deposits. Thought that was really genius to be able to do that on such a short term and at the right time to reassure everybody. So I think she's doing everything right, to be honest, in reassuring folks that, like, look, we have more levers to pull. And that was the biggest issue with 2007 to 2009, is that when you take interest rates to zero, you don't have any more levers to pull, right, to save the day. Here we do. We're not at a bailout of any sort. Right. We are, we have the Federal Reserve and the Treasury backing up the banks. Other banks are buying banks. You hear Jamie Dimon's all over the news, or at least his name's been thrown around as, advising the, banks what to do. So I think I think it's banks saving banks at this point, with the government saying we will hop into if we need to. I think overall that's very reassuring. I think the market's probably pricing that in a little bit, like we've seen the worst and that things are going to get better from here. But overall, very happy with her statement. And I do not think it's alarmist whatsoever.
Last, Amazon announced another 9,000 in job cuts in addition to their already announced 18,000 this year. What does this mean for the stock?
Okay, Amazon it keeps cutting jobs. I saw a number, and I'll while I'm talking, I'll flip through to see if it's actually here. They hired, coming out of COVID, which is going on 4 years now, that we had the big COVID sell-off. That was March 2020. I think I said 4. I meant 3 years. 3 years since the big COVID sell-off, where they hired just a ton of people. Here's 21 numbers. They went to 1.6 million, higher from 800,000 basically in 2019. So they've ridiculously expanded, right? Because they were the company the world needed in COVID, in COVID, where you can't go out, have to have everything delivered to your door. It's like, okay, fine. Amazon's like, guess what? That's what we do. So dun-dun-dun, we're here to save the day. And they did. So they really not bloated. They expanded significantly. Bloating would be judgmental. But I do think now that they've realized that, going forward, they need to get a little more operationally efficient. So when you think of, 18,000 earlier this year and 9,000 on top, now, 27,000 total, right? That's a lot of jobs, but it's also a pretty small number in relation to the overall number of jobs that are out there. Now, if it's your job, obviously it has a huge impact. But if it's not your job, then this is really pretty minor tweaking, if you will. And I think it's going to be beneficial for the stock. We'll pull up the chart here real quick. We'll pull up a 1 year. The stock's been pretty rough road for Amazon. It hasn't really recovered like the other big tech stocks have. And that's if you call this a tech stock, which I do, because of such of the tech exposure. It's not just a logistics stock. But really, when you look at it, currently unprofitable, but scheduled to become profitable. Down, or it's up a little bit on the year, but not like the others, if you will. So it's got a lot more runway to go higher. So overall, I think Amazon's doing the right thing to be able to kind of right size itself and get a little more efficient. And in turn, that's going to help the stock, where it's been stabilized basically for the past 6 months, kind of help it get, gain ground to be able to march significantly higher.
Thank you, everyone, for your questions. Please submit your questions as a comment through social media or directly to our email at vipservices@ankerstarwealth.com. And don't forget to like and subscribe to get daily updates. That's all we have for today's show. I'm Allison Ankerstar. We'll see you back here tomorrow.